Let's get you set up for tomorrow's trade. Joining us now is Drew Pettit from Citi Research. Drew, what's the right, rational response to these CPI numbers?
Honestly, I think longer run, when inflation's moving higher and that's a sign of good demand, that should be equity positive. It normally is. But we're in that environment right now where, honestly, it's a bit of a catch-22. Markets want good growth, but they want lower rates at the same time. So for now, bad news might be good news. And inflation, while a little bit hotter than expected, not terrible, really, for equities.
So if you're a long-term investor, you just keep averaging in, or are there significant shifts that one should be making based on what's happening in Washington, based on the global dynamic shifting?
It's funny, when you're worried about the macros and we're in this heightened macro sensitivity world, I actually think you kind of do the opposite. Instead of thinking about the big shifts, you think about incremental alpha. And honestly, the story that we've heard on this show throughout the day, over the weeks, it's broadening. There's a lot of interesting stock selection opportunities outside of mega cap growth right now.
But do you even need to select, or should you trust the indices? Should you trust the broader ETFs?
Yeah, it's funny. I actually think you probably want to do some incremental stock selection here. When we talk about broadening, we kind of forget that that applies to growth as well. It's still a growth market. There's a lot of really good growth themes outside of AI that are really kicking in. A couple that you've almost highlighted during earnings is video gaming and digital leisure, something like AppLovin plays to. And then on the cyclical side, we're emerging outside of some of these kind of mini under the surface recessions. I think you can buy some of those names and themes as well. So barbelling through the macro chaos is really the play here.
AppLovin, if it trades tomorrow where it's trading right now in overtime, it's going to be up about 10x in a year, near $150 billion market cap. What does that say when you take in also the AI plays and what we've seen them do? What does that say about this environment that we're in? And should investors be worried about names like this or inspired by them, because these are periods of breakneck growth that you want to capture?
So honestly, a little bit of both. For this name specifically, if you look at what the market's priced in, again, us doing our reverse DCF work and where our analysts think fundamentals are going, it's still an attractive growth stock. The valuation, actually, for its growth isn't as crazy as people might think after that move. There are some bigger names, especially in the NASDAQ 100, where you might want to be a little bit more selective here. I think, honestly, if we're looking for growth, we want operating leverage, like you see in a name like AppLovin. You want to see premium growth, but you want to make sure the DCFs make sense.
What about the AI story? It's certainly helping Cisco right now with its results. There's a lot of data out there, especially generated by and for AI. It needs to be moved around, and networking equipment does that. Do those stories, you think, have legs?
I do. I do, honestly. We've talked about this a lot. Honestly, it had to be almost over a year ago we started talking about broadening out in AI. It's not just about chips. It's not just about data centers. You have to start playing the whole value chain here and expanding. And yeah, you're starting to see that in more and more names, especially the users in the application level now. That all plays to growth broadening. And I really think that's been the story so far in 2025.